All right, good afternoon, everyone. This is Rose with Brooks Price Action Team. Today is October 15, Tuesday, and I'm going to do a quick end of day review on S&P futures ES chart. So here I have the daily chart, the Globex 15-minute, 5-minute RTH, regular trading hours, and I have the 60-minute chart with last week's range. All right, so is yesterday, which is this day right here, we were pretty bullish at the open, and the market then started to grind upwards. So it's just continues to buy all day long and buying at the fair price, which is moving average is as well. We had what seemed like a reversal attempt at the end of the day. That's pretty much profit taking by bulls end of day, but we reached and closed below the moving average. So now at the open today, I'm wondering if the market is going to start buying as early as is in the at the open with bar 1 and 2, that we're going to go and test the highs, possibly make new highs. So I'm looking for those highs. So for example, here I'll put in that is yesterday's high right there, okay, with bar 76, and then I have a close of yesterday, which is right here. These are important levels, so you should always have them on your chart. I generally color code them so that I like to pay attention to those levels a lot. And then yesterday's low was bar 1 low. So I'm going to have that because if when market gets there, I'm looking for buyers. So I'm going to mark that as somewhat of a green color. Okay. And then you can have a mid-range of yesterday, but it's not necessarily important. What's important is the open of today. So open of today, which was right here, and you should have that also. Colors, generally I use gold. So let me mark that. There it is. That's the gold. So these are important levels right here. And so we've opened up this morning and ended up having a bar 1, a trading range bar, which is a doji. But we do have a slight little gap from yesterday's close, not necessarily from the EMA. So the gap is not all that important, but I need to see more bull bars to see if we're going to test yesterday's high. And if we fail, then we're definitely not going to mark up the prices. That means we're not going to advance into the bullish territory. So I'm also looking at yesterday's daily bar right there. That was yesterday's daily bar, and markets is pretty much an all-time highs. It's just so high, and we have been pushing with several legs now, and you can see right here is market has been pushing. You could say maybe leg 1, pull back, leg 2, pull back, leg 3, and within this leg, you have leg 1, pull back, leg 2, pull back, leg 3 going on. So it's and then you can even count from here, but that's not what I'm looking at this point. I'm looking, since this is a new low. Actually, it's not. This is lower, but it's still a deep pullback. These are pretty significant legs right here. So I'm looking to see some kind of a reversal, at least come back down to these breakout points, maybe that high, which is 58.25, or somewhere around here. I do have a tight trading range. We might need to come in and retest this area, and the moving average is there. But what do we need in order to continue to sell? We need several bear bars. Okay, market needs to show us several bear bars, and another important level is this trend line. So if we get another bear there tomorrow, That's going to be very interesting because market can get a quick pullback. Say tomorrow is a bear day, we go up a little bit somewhere since both days, Monday and Tuesday, are overlapping. We could, and that means a small trading range. We could just go back up a little bit, find some sellers there, and then continue to come down. And then the following day, it will be sideways and down price action. We could reach here, okay? So, but probably buyers waiting in this area. So we'll be testing it twice before bouncing again. We're so very close to the 6,000 round number. Market might be wanting to get there. We don't know. Right now I'm counting is how many legs the market pushed, so that's what's important to me. But if the bears really get serious about selling, I still need consecutive bear bars, several good bear close days, so on. So as far as the hourly chart goes, so let me make that a little bit larger, this is last week's high, low and mid-level. So basically I am looking for how much did we gap up from yet last week's range, what's the breakout look like, and then are we getting exhausted? If we do, then I'm going to use last week's size as my target. Now we have actually pulled back to the last week's size today. Here's bar 1, bar 2, bar 3, but let me add these. This is the day separator. Okay, so that's better. Actually, it's not too busy. So just give me a second. That should be a lot lighter. Yeah, that's better. Okay, so this is today. Bar 1 is a major bear bar closing on its low, so market will probably want to sell. But what does that mean really? Well, look at left, right? That's where the price action is. So we started with bar 1 and 2 overlapping, so we're going to be in a trading range. And anyone already selling, they might be looking for some kind of a bear flag. So I'm not pretty much doing anything here. I'm looking to see if the bears are going to be able to close this gap with yesterday's close bar 81. And if they cannot close it, are we going to be able to go back up and buy and test the highs, maybe get a double top and then reverse back down. But yesterday I said market actually wants to come down and test right here, right? So we failed to test there, but now today we did. So that was your projected target. But I also said yesterday, if we start to sell, we're also going to come down and we're going to test bar 19 low. So look what the market did today. So we did come down and tested the bar 19 low and then tried to bounce, but then we failed. The bulls failed to buy. No one bought there. So now we have a bunch of gaps here. So market is continue to sell. But here's the problem. They're trying to come down to the open of yesterday, and they're trying to start closing these gaps. There's a huge gap here, right? Starting from these 81 open and going all the way to the bar, I'm going to extend it, is bar is 2 body open. So this right here is a major gap, right? So my gaps are always white. All right. So then I also find if this is a major gap, I also find its midpoint, right? So that is the midpoint right there. I'm going to mark that. Okay. So generally I do this exercise before the day starts, pre-market. So I have my levels pretty much. So basically I'm not seeing anything except I'm seeing this trend line. This trend line is a profit taking. If we start to sell, we're going to sell and target this trend line. That's number 1. Number 2 is I have this level. If we break this trend line, we're going to come down and test the bar 19 low. And if we continue to come down, this gap is the most important gap. But what else is there? Well, if we close the gap, we still have to test something to bounce from. That's this trading range. So I'm going to find the heart of this trading range, which is, let's see, just about there. Oops, sorry. Just about there, maybe, yeah, right here. So I'm going to use this area. Well, I mean, it's not all that, well, there's a little bit of gap there, but let's see. Gonna take that. Yeah, take this right here. More bars is sideways. So if market continues to go in sideways with bar 3, 4, 5, 7, bar 6 actually ends up becoming a outside down there. So, and it made a double top with bar 1. So now I have yesterday's spike and I have a double top. This is a bear flag right here with bar 1 high and then the bar 6 high. So I'm looking for some kind of a sell signal, but it's obvious it's the trading range. Can bar 6 sold? Problem here is that you're selling right at this trading range low. Or what happens to the flags is when you sell right away, generally is you're going to end up getting buyers here. So institutions know that there's always a possibility of a failed leg. Okay, breakout. So it's failed flag. So what they do is instead of selling, they actually take profit. They might have already sold yesterday. They take a little bit of profit and then they look for, sellers. So here is, you can say, well, here is my trend line. Will the market break that trend line? Market actually broke that trend line with bar 8. Bar 8 is where I sold and I had a stop there. So I'm looking for is right here a 2R, 3R, and 4R, right? So 2R, 3R, 4R, and I had a 4R, and I see the profit taken. But the problem here is this very strong sell. This right here, creating a gap like this, is most likely it's going to look for another bear flag. It kind of anchors, right? So this is your anchor. Bears are putting an anchor, right, in the water and saying, we're not going anywhere. We're going to hang out here, and most likely the first pullback we're going to sell. So you could also say, well, what about the measured move? Okay, so you can measure right from here, maybe the breakout right there, right, is you can have a measured move or 2R, or what else they're doing? Well, we have a huge gap bar right here, bar 12. So you can measure from the 55 low. That's your measured move right here. And you can see the market came down to the measured move and started to take profit. But will you buy here? No, you're not going to buy here because market already broke below this target line. It probably is going to use that as a trend line to test, and it's going to try to form some kind of a bear flag. Okay, so here is a bear flag formation. Some bulls see this, or bears, 1, 2, 3. Okay, but I don't like that because this is what I'm looking for. So bears are looking for a bear flag underneath the moving average. They're also trying to keep the gap open to the moving average, and they're looking for a lower high to sell. And that's what I was saying on Discord today. So if you're going to sell, at least wait for price to move back to some kind of a fair price or key price, which is moving average, and then see if you can actually sell from there. Because if you're selling here, we're already tagging these gap area, and there's buyers who are very strong here. Most likely those buyers will show up once again. So buyers showed up, but it's not good enough to reverse the market. It's not turning out to be a V-shaped recovery or sharp reversal to go test the climax bar starting point or highs like 11 and 12, or the pause area bar 8. So eventually we're going to get back to bar 8, but not right now. So when you see something like this, expect another leg or two down, well inside maybe the midpoint of this gap area, okay, which is 58.70. So I'm looking for now is the measured move right here. Bears are actually finally made the double top bear flag. So you got a lot of is low 1, low 2, low 3, or double top low 2, 26. I am selling, right? I started to sell again. I'm looking for, if I put my stop there, here we go, so I have a 1R target there. I want a 2R, but it reversed. So what if I use right here, that's a micro double top, another double top, that's my 2R. So I ended up using that and then exited. As soon as I saw this bar, I exited out of this short. But I kept telling people most likely this trend line is going to be problematic for bulls because if we cannot break above it, we're never going to be able to close these gaps. So I'm looking for bears to sell once again and come back and test these lows. I did ended up exiting and buying and scalping here, but that was nothing but a scalp for me. Once I saw the bar 38 did not close above this trend line, I'm selling here and I'm targeting this price point, which is the gap midpoint. 58.70 is my target. So market is selling, so am I, and somewhere around is, let's see, micro channel here, another bear flag. We're taking out these lows, so um, I have also a some kind of a trading range here, which is the bear flag. Okay, is trading range is I'm looking for a measured move target. So I'm not only looking for market to reach here, but I'm also looking for market to reach here. So market is selling. I'm still holding. I'm telling people not to buy anything. There's nothing to buy. Please keep selling. My target is right here. But if we break this target, okay, some people say, well, what if I measure the trading range from the extreme? So where did they break? They broke right here around the 15, right? So this is your extension. Or you can say here is my the high of the trading range and the low of the trading range, and they broke it right there. So I'm looking for a continuation target. That means this is your extension. That's your measured move target. So market is selling, which is great. Or you could say, well, I don't need any of this. I can simply take the measured move from that high. That's the break of bar 19, and that's what I'm selling. Okay, that's great. But what about selling from right around here? You probably are not going to reach that target. The reason why you're not going to reach that target is because bears actually close this gap right there. Okay, now is which is a great accomplishment, but there is something here that I marked earlier. There's a balance zone, tight balance zone, and the market is, and you can see it is on the 15-minute chart as well. So when market gets down here, I'm looking for taking profit, especially if it's the end of the day. So it's the same area is right here. I'm looking for bounce from here, and I want to buy it, especially at the end of the day. So market selling is in a bear channel, right? And I've sold and sold, and I kept telling people is buyers are going to start show up. If we don't close this gap right here, we're going to either start reversing here, we're going to go back in here, and then sell again. Or if we start to close this gap, I'm going to look for buyers around this area. And there it is. And market came down and found a reversal. The buyers are now making a inverse head and shoulders, bar 68, bar 74, and bar 78, but it's the end of the day. So pretty much I bought here and I was done with my trade. However, what about, I'm going to show you guys something else. There is a channel here, right? Let me get this out of the way. There is a channel right here, and we're breaking this channel, which is a trading range. So if you actually measure this channel, right? So that is your channel high, that is your channel low. Now take a look at this, right? Maybe I'll take that. That is a lot better, I think, here, but yeah, I'm not really liking that. So let me try this. Let me connect these lows first and then connect these highs. That should be a much better channel. Well, this is why I don't really like channels. I'm trying to connect as much highs and lows. Okay, so this is a decent channel. And you can see right here is markets broke. So it's broke down. So what do? Here's a trick that I have learned a long time ago. And I pretty much, it's almost like a channel measured move. Here's your measured move, right? That's your 1R. Here's bears are still continue to break these. Is look at bar 13. is followed by 14. So now look at this. That right there is a 2R, and they started to reverse. But if you actually extend this channel, right? Let me extend it right there. You're going to see that channel broken right here. So you're going to keep stacking these, and you're going to find the next target, which is somewhere around this low, right? And I see another break. Okay, I'll just take another exact same channel. I'm doing nothing different, and I'm going to add it, stack it to the downside. So now I'm looking for is right there another break. Okay, so now I'm going to add that, and somewhere around here is, I didn't do a very good job there, but still, look how close we got, and we found buyers. So basically we stack 1, 2, 3, 4, 5. So this is basically 1, 2, 3, 4, 5, 5R, and market just kept selling and selling and selling. So pretty interesting. So let me lock this, and let me delete all of this. So basically, how would you buy and sell that, right? If you're just looking at today's price action, nothing else. You see a triangle right here, right? You get a triangle, and market is showing you a triangle breakout and a retest the breakout point right there. Retest the breakout point with bar 10, and bar 11, semi-decent bear bar, closing on its not low but below its midpoint. It's all right. I can definitely have a sell order is underneath that, but when I see a bar 11 with a strong lower wick, I generally like to sell the close of the bar, not below it. That gives me a better entry. So is I do sell, and I'm looking for is follow through, or you can say, well, maybe I can just take this as my measured move target. That's 1R, that's 2R. Market reached that target with bar 15, and then I start to take profit. As soon as you see bar 12, that's a stop order entry. You should sell. Bar 13, some profit taking began with the lower wick, but bears are continued to sell, so that's great. The wick is only less than 1/3 of the entire bar. So when I see that, basically look, it's basically 20% of the entire bar. I'm able to sell the close of that bar 13. But if the wick was somewhere at the midpoint, closer to 50-60%, I probably wouldn't have sold it, because chances are they're going to buy and they're going to test the upper third of bar 13. But since it's only at 20%, I'm just going to sell the close. I'm going to look for follow through since I have a target down here. And market then tries to have a couple of attempts, first leg, second leg, even a third leg with bar 25 and a 26 high. So there's a wedge top there, or double top lower high, another flag. So I want to sell. Bar 26 is a good sell signal. I will sell the close or sell one tick under. And I'm going to target bar 15 and lows. I will take profit at the bar 15 because that is possibly institutions are taking profit, and they're always expecting a failure of a breakout or failure of pattern. Patterns always fail. So I took profit there, and you can see that they failed. So this trading range continues. Now, I have a trading range, and we're at the midpoint. But at this point, we do have a gap here. So when we have a gap from the moving average, I know that the first reversal will probably go to sell again. I'm looking at the bars, the bull bars, and how strong they are. Are there any consecutive bull bars? Yes, there are, but the only consecutive bar is the 36 and 37. It's not all that great, and it's at the top of this is what seems like a bull flag, but we're not getting any two consecutive bull bars to say this is always in long. However, if bar 33 was a strong bull bar, and we start to close above the moving average, oh yeah, we would have turned always in long, and we would have started to close this gap a little bit, and then we would have reversed back up to the bar 10. But that did not happen. There's no always in long. This always in long is going to fail here. So I'm looking to sell again. So now I see a bull bar, only bull bar closing above the moving average 37, and an inside bar 38. That's a good possibility that I might be able to sell again. I'm looking for a good bar to close below the moving average. Bar 39 closes, so now I'm looking for bears to close this little gap. They closed the gap, so I'm continuing to sell this. And we're finally taking out the 15 low, but the breakout is not all that great. And in the meantime, I'm able to actually count leg 1, pullback, leg 2, pullback, leg 3. Okay, so I have a leg 3, and this area, if I want to sell right here, it might be too late. So best to actually sell another pullback, but expect a follow through, expect some kind of a bear flag and a follow through selling if the bears actually take out the low of bar 48. So this is a pullback, good opportunity. Another inside bar 52, just like 37, 38, 51, 52 is, and it's a follow through bear bar 53. Okay, I'm looking for this small gap to close. Bears close the gap, so I'm able to sell again. This is a bear flag. And I continue to sell, and there is now more legs, leg 1, pullback, leg 2, pullback, and leg 3. So I'm looking for bulls to show up and get us back to maybe here, but I'm not seeing any bull bar. So this is a wedge failure, therefore another flag. So there must be some kind of a measured move. So where's the breakout is I might be able to take this, is maybe put my stop there since it's a lower high. That's my measured move target right there. Okay, so is why? Because this leg's supposed to reverse and test the bar 59 and 60 highs. Instead, it ended up being a failure and a breakout to downside. So to me, I can take the stop area 50, 59 high. Since we take out the lows, stop can be positioned there. You don't need to put your stop there. So market continues, or you can definitely take the breakout point from here, put your stop there. That would be your measured move as well. Okay, but I like to measure from where am I going to put my stop, and where is the breakout level? That's the breakout level, strong breakout bar. That is a good lower high. And since we're making new lows, breaking out, this is my measured move, and that's the way that I'm going to measure. So market continues to come down, is another final leg, but we're at the end of the day. We need to take some profit. And again, you're testing to the left, everything you own is to the left, right? So we have a balance here, so most likely we're going to reverse. Inverse head and shoulders is buyers start to come in, one hurrah to the moving average by bulls, but that's about it. This has been selling so long. Tomorrow, we could get a follow through selling first hour and a half and then sideways and reversal up. But we'll see about that. Is tomorrow another reason why we would sell? We're getting very close to the 50 EMA. This is 50 EMA, this is 20 EMA on the hourly chart. So we might need to close that gap and test at and underneath the moving average. So that is around like 42.75. So somewhere around here, if we come in and there's sideways market, and that sideways market can reverse back up. If we start the reverse, where are we going to go? Is tomorrow, right? So we do have a resistance here. We need to form some kind of a trading range. If I see market making higher lows, I'm not going to buy the first breakout, right? So that's going to fail. That's also going to be a squeeze by bulls trying to squeeze the bears out of the market. I need to see that happening first. Because if you buy the first squeeze, they're going to trap you. You have to wait for market to come back to the moving average. You look for failure, and then you buy into those stops. Then you get a reversal. So I like to see this cup and handle formation for bulls. And then is when we start to buy, is we're going to go right back into this trading range. However, if we get there, bears are going to try to sell one more time. So I'm going to look for, so this is going to be my supply zone. Okay, supply zone, and I'm going to be looking for some kind of a double top and failure, sell back in here. But if we somehow become bullish and start to reverse, that supply zone can be broken, but right now it is a strong one, and that is actually right here. And also this is the first resistance. So eventually we're going to sell and then go back up, go back up. The first sellers are here, and then somewhere here we'll find buyers, and we're going to go back in here. This is where I'm going to look for some kind of a double top, right? And 1, 2, and 3 also wedge top, and then I'm going to swing back down somewhere again here. So we might end up becoming an inside day tomorrow, but we'll see how this goes. So is first sell on the higher time frame around here, and then bears will probably try to close this gap, which they failed on the daily chart. We could come down here and then bounce and then stay sideways. So yeah, very interesting day, very bearish day. If you guys want to join is the Brooks price action trade room tomorrow, I'm actually um, streaming in the morning, so you can come in. We have 2-day trial. Is you can join for free, but you have to register at this brookspriceaction.com/rose website. This is my page, but you don't have to. Is you can just if you go to this directly, then they'll know where you're coming from, and could be a faster registration. So go in, register, get your 2-day trial, and then or you could just simply join the trade room. It's probably prorated now. Normally it's $99 a month. So we have full month coverage. Some days are full days. We have other streamers. We all speak the same language, Brooks Price Action. So bring your questions, sample 2-day free. And then I'll see you guys in there. If you have questions, address it on the Discord. You can also join my free Discord. There's no charge. Is come in, join, bring your questions, and we'll go from there. Okay. So very bearish day is right here. This sets the tone. Bar 12, 13, and 14 anchors, and that means you should be looking for more bearishness from the market. Moving average crossover, that is even more bearish, so you should be looking for a mile long bars. There it is, 67, and a follow through leg. But we were at a support area of interest, so expect a reversal. All right, have a great day, everyone. I will see you guys tomorrow.